Welcome back to StockSage Insights. I'm Sarfaraz, and in today's episode, as promised, we're diving into Barron's top 10 stock list for 2024. It's an exciting lineup featuring Alibaba Group, Alphabet, Barrick Gold, Berkshire Hathaway, and several other interesting names. We'll take a moment to explore each one, focusing on their strengths and valuation. Before we jump in, I want to give you a heads up about our next video. I'll be highlighting a stock that's garnered a buy rating from analysts and offers an attractive dividend yield of over 8%. So, don't forget to subscribe and hit the bell icon to get notified as soon as that video goes live. Now, let's turn our attention to the Barron's list and break down what makes these stocks stand out. Starting with Alibaba Group Holding. It is dubbed as one of the world's most undervalued tech giants. Barron's highlights that after an 18% drop in 2023, Alibaba's US-listed shares are trading for just 8 times the projected earnings for the current fiscal year ending in March. Remarkably, the stock is currently priced around $72, returning to its post-2014 IPO levels, despite experiencing a tenfold increase in revenue and quintupling its earnings since then. When you consider the sector's median forward earnings multiple of 15.6x, Alibaba's valuation of 8x looks exceptionally compelling. Continuing our exploration of Barron's top 10 stock list for 2024, let's move on to Alphabet. Described as possibly the best bet among the so-called Magnificent Seven tech giants, Alphabet is anticipated to show strong earnings growth. Barron's reports suggest it might grow as fast as Microsoft with a 15% uptick in earnings, which is 3 times the rate of Apple's growth. However, it's worth noting that Alphabet isn't as undervalued as Alibaba, trading at almost 24 times forward earnings estimates. Despite this, given its consistent growth and high profitability, even at its massive size, Alphabet may still be considered appropriately valued by some investors. Next up is Barrick Gold, a company with ambitious plans to increase its mine output by 30% by the end of this decade. With virtually no debt and a 2.3% dividend yield, it's an attractive option for those looking into the precious metals sector. Currently, Barrick Gold trades at 21 times forward earnings. Barrick is also reportedly eyeing an acquisition opportunity with First Quantum Minerals, especially after a significant dip in First Quantum's share price following troubles at its flagship Cobre Panama mine. Next on this list is a name that is synonymous with investing excellence. That's, of course, none other than Berkshire Hathaway. The recent passing of Charlie Munger has stirred conversations about the future of Berkshire post-Warren Buffett. However, Barron's is confident in Buffett's preparation for Berkshire's success even in his absence. The company's earnings are robust, with after-tax operating profits climbing nearly 20% in 2023, possibly reaching $40 billion this year thanks to higher interest income and solid insurance underwriting results. While Berkshire Hathaway has always commanded a premium price, trading around 20 times earnings, it's not considered overly expensive, especially when compared to its own 5-year average of more than 22 times. For many investors, this seems like a good price to pay for partnering with Warren Buffett, who is arguably the greatest investor of all time. Next, let's turn to BioNTech. Despite the stock trading down from its 2021 peak, Barron sees potential in BioNTech's oncology-focused pipeline that may surprise investors. Notably, the company holds cash amounting to nearly 3/4 of its current market value. At present, BioNTech trades at 24 times forward earnings. Shifting gears to the energy sector, Chevron Corporation is the next stock on our list. Chevron and other oil companies have reaped the benefits of high oil prices, bolstering their profits and free cash flows. Chevron stands out not just for its solid performance but also for its commitment to dividends, a significant factor for income-focused investors. With oil prices maintaining strength, Chevron's outlook for 2024 looks promising. Currently, the stock trades at 10.7 times projected 2024 earnings and boasts a 4.2% yield, with an 8% dividend hike planned for January. Analysts like Greg Buckley from Adams Funds highlight Chevron's lower-risk growth profile, attractive valuation relative to cash flows, and anticipated total yield of about 12% post-test deal. Now let's delve into Hertz Global Holdings. The stock is catching eyes due to its appealing valuation, trading at just 8.6 times projected 2024 earnings. Analysts like Deutsche Bank's Chris Waronka are calling it overwhelmingly attractive for those with a bit of patience. Next up is Madison Square Garden Sports, the proud owner of the New York Knicks and Rangers. There's talk of potential sales or strategic moves that could significantly unlock value, including selling minority stakes in its iconic teams or perhaps even the entire company. Despite the potential, it's worth noting that Madison Square Garden Sports trades at a hefty 90 times forward earnings estimates, making it a pricey pick. This valuation could be a deterrent for some investors, despite the prestigious assets it holds. Turning to a familiar name in the beverage industry, PepsiCo stands out not only for its brand recognition but also for its impressive track record of dividend growth, having raised its dividend for 51 consecutive years. PepsiCo is eyeing earnings growth at the top of its high single-digit annual target for 2024. With a 20.6 times earnings ratio for 2024 and a solid 3% yield, PepsiCo continues to be an attractive option for dividend investors. Finally, we look at UHaul Holding, a company with a robust self-storage business that ranks third in the industry. Its significant market presence and valuation at about 14.1 times earnings make it an intriguing option for investors. UHaul's diverse business model and industry position offer a different kind of investment opportunity compared to the others on the list. And there you have it, a rundown of Barron's top 10 stocks for 2024. From tech giants to traditional powerhouses, this list offers a varied palette for investors looking to diversify or pinpoint specific opportunities for the new year. If you found this breakdown valuable and are looking for more in-depth analysis and discussions on high-quality investment opportunities, consider backing me on Patreon. Your support will enable me to deliver more detailed research and insights directly to you. Remember, every bit of support goes a long way in enhancing the quality and depth of content here at StockSage Insights. Thank you for joining me on this exploration of Barron's top picks. If you enjoyed the video, please give it a thumbs up and don't forget to subscribe for more insightful investment content. Stay savvy, stay informed, and I'll see you in the next video.